What if the world's biggest crypto, Bitcoin, just lost half its value from its all-time high, and right now, markets are torn? Is this the start of a new crypto winter? Or is it the biggest buying opportunity we've seen in years? Today, we're going to break it all down. Bitcoin's current price and its history. What's happening with Ethereum? The total crypto market cap. Why prices fell so hard, and what analysts are thinking is next. No wild speculation, just real numbers and real logic. Let's dive in. Right now, as of February 7th, 2026, Bitcoin is trading around $66,857. That's a significant drop from its recent highs. Ethereum is sitting near $1,941, also much lower than its previous peaks. The entire crypto market is feeling the pressure. The total value of all cryptocurrencies has been hovering in the $2.3 to $2.5 trillion range recently. This isn't just a minor pullback, folks. This is a major correction that's impacting every single major coin. So why did the crypto market suddenly weaken? Let's break this down logically. We've seen steep declines from all-time highs. Bitcoin hit a record of nearly $126,000 in late 2025. Since then, it's pulled back almost 40 to 50%. Ethereum saw similar declines, losing over 30% this year alone. This kind of rapid sell-off usually tells us two things. Investors are taking their profits off the table, and the market sentiment has shifted from greed to fear. Second, there's macroeconomic pressure. Believe it or not, crypto markets have started to correlate with the broader financial markets. When the stock market wobbles, crypto often weakens right alongside it. Third, we have liquidations and margin pressure. When prices fall this fast, traders who are using leverage get forced out of their positions. This is called a liquidation, and it amplifies the drop, creating a cycle of panic. This domino effect continues until the fear finally starts to ease up. Right now, Bitcoin is in that $66,000 to $70,000 range. Over the past few days, it even dipped below $60,000 before rebounding. This tells us one critical thing. There are still buyers willing to step in around these key support levels. When we look at the weekly data, the pattern is clear. There's strong volatility, a very wide trading range, and solid support somewhere between $60,000 and $65,000. So even though Bitcoin's price is down from its peak, the market isn't dead. It's swinging violently between fear on one side and support on the other. There's a reasoned logic behind these moves, and it's not just random chaos. First, there's regulatory uncertainty. Across the US and other major economies, the rules for crypto are either getting tighter or are still unclear. This makes large institutions, the ones with the big money, very cautious. Second, we're seeing profit-taking after the massive rallies. When Bitcoin doubled or even tripled in price during the last cycle, it was only natural for early traders to start selling and lock in their gains. This creates temporary downward pressure before new buyers eventually step in. And third, we have a macro rotation. Some capital is moving away from riskier assets like crypto and flowing into traditional safe havens like gold. This doesn't mean crypto is dead. It just means that right now money is flowing to where the confidence is highest at any given moment. Ethereum has also followed Bitcoin's weakness, and historically, where Bitcoin goes, ETH tends to follow. Right now, ETH is in the $1,900 to $2,000 range. But here's a key point to remember. Ethereum has its own unique drivers. Things like DeFi activity, staking demand, network usage, and the growth of NFTs and smart contracts all play a role. So even though ETH is down, its fundamental value proposition is different from Bitcoin's. Let's zoom out and look at the bigger picture. The total crypto market cap has dropped, but it's still holding above that $2 trillion mark. In terms of market dominance, Bitcoin still commands the majority, typically between 50 and 60% or even more of the total market cap. Ethereum is the second largest. This tells us that money isn't leaving the crypto space entirely, it's just rotating. Seasonal cycles and trader psychology are playing a massive role in what we're seeing. So, let's talk about the possible scenarios from here. First, the bullish scenario. In this case, buyers return in force near these support levels. Bitcoin stabilizes above $70,000, Ethereum finds its footing, and the DeFi space recovers. If this happens, Bitcoin could start testing higher levels again. It's possibly pushing back above $80,000 or more, especially if the broader macro conditions turn positive. Then there's the bearish or continuation scenario. In this case, fear persists, the selling momentum continues, and we see a wider drop in the total market cap. If that happens, we might see Bitcoin revisit lower support levels, perhaps dipping down to the $55,000 to $60,000 range before it finds a bottom and starts to recover. It's crucial to understand that both of these scenarios depend heavily on global economic trends, not just what's happening inside the crypto bubble. Different types of investors are thinking about this situation in different ways. The long-term holders, the hodlers, they're focused on the cycles. They know that crypto has historically rebounded from crashes like this, but they also know that patience is key. The traders, on the other hand, are looking at specific price levels, using stop losses, defining their profit targets, and managing their risk very carefully. And for the new investors who might be watching, the most important thing is to avoid making emotional decisions. Price swings are normal in crypto, and this kind of volatility is part of the game. Remember, crypto is not a straight line going up. Its history is built on cycles of fear and greed. That's why staying unemotional and strategic is what matters most in the long run. So, to wrap things up, Bitcoin is volatile and down from its highs, but is still finding support around critical price levels. Ethereum is following Bitcoin's lead but has its own unique fundamentals to consider. The crypto markets look weak right now, but corrections are a normal and healthy part of any market cycle. Bullish and bearish scenarios both exist, and ultimately it's your strategy that will determine your success. If you want to stay on top of the market with weekly updates, get insights on the key levels to watch, and receive realistic price analysis, make sure you hit that subscribe button and ring the notification bell. Thanks for watching, and I'll see you in the next video.